Having having grown up in the city that is closest to the country, that is most directly south of the United States, and no, it is not El Paso. It is Detroit. Detroit is north of a country we like to call Canada, which most people see as the north of us. But I did grow up in Detroit, and as a late teen, early 20s, we would go over to Canada, to Windsor, which is south of Detroit. So when Journey sings "Born and Raised in South Detroit," he really means Windsor, Canada, we always said, but most people don't know. But Stephen Perry is from the city by the bay, San Francisco, so he didn't really know what he was singing. Anyways, I digress. The reason I bring this up is I want to talk about the dollar, loonie, US dollar, and the Canadian dollar. I brought up a pair here just to show a trade that's set up very nicely here for the week, and then I want to kind of go back to some bigger time frames to show you why context and why Confluence are so important to use multiple time frames so you can make trades maybe that are to the larger size that you do like to put on occasionally. And you can put them on really at an area that makes most sense. This red line that you see, the horizontal line that goes through here at this price here, is 133.658, and we are now sitting above it almost a full half a point, which is a considerable move that we saw today, and we traded up to 144, almost a full point. All right, so the reason I bring this up, this red line right here, is the weekly point of control on the market profile auction theory. Okay, so this is probably the most relevant midterm price before you go to the 2 weeks, and then you go to the 3 month. I'm going to show a couple charts here. So I want to show you a couple weeks, and we're going to go back here so you can see a couple weeks, and you'll note back here to the 7th that our point of control here is much lower, 131. But for the last week, after we had the Fed announcement, we had this huge spike in the dollar again. That formed that new 1 week price level that is go, no go, once we shot above it for the rest of the week. Now we traded below back to another kind of point of control right here, which was 133, held that, you can see that here. But the big one, after this held and we rallied, so there's really a couple trades here. You could have had the pullback to here, you had a pullback here, right to a value area on this day, and then after it ran, you had another pullback here, another pullback here to this line, and then the big one happened on yesterday, on Tuesday, as it pulled back right to that 133. This was a great area for you to buy just for the end of the week trade for another rally in the US dollar versus the Canadian. And sure enough, you got a full point. The reason I go back is this context happened not because this was there was something in the market that happened. So this is really important. If this were just another week and there was no real news, this would not be as powerful. But that news, the Fed announcement of a rate increase, was the reason why this needed to hold here. And if it didn't, this one wouldn't hold and we would go down further. Okay, so this was a great buy with the stop really, somewhere below here, which is about a half point. So you're looking for a 0.2-to-1 risk ratio on this trade, which was a great trade if you could have, again, paid attention. And this happened across a number of items. Now, when we look again at the 2 week, and I want to go back to the 7th here, which is 2 weeks from today, the 21st, you again see that the point of control shifts. Okay, it's down here. But this last week was the most relevant because of that price increase. I want to bring this up just so you understand that this is such a key difference. All right, but The rate increase strengthens the US dollar, which weakens the Canadian dollar, which makes this pair go higher. All right, now I want to bring up a couple more charts here just to kind of further look out on time frames and why this is important, even if you don't trade the longer term time frame. So I'm going to go back 1 quarter. And the reason why I'm going back 1 quarter, this is the next relevant. Really, it's 1 month, but I'm going to go back 1 quarter to show you this. What I see here now is the last 3 months. We've had a huge rally, and that the bulk of that came after the Fed announcement. So there was your rally right here, back to the key area, which we just talked about, which was 133.92. Okay, we have since came back to test this one, which was the 1 week, and now we're going higher again. To me, I would look at this and say any pullbacks down to, basically 133 above this level, I want to be a buyer, especially if I'm a longer term trader. Okay, so this is really key that you note this. And then if I look out a year, I'm going to go back to the start of 2016, just so you can, again, get a little bit further in the time. The longer we go back, the more strength the charts have as far as market profile. The more participants, the more strength, the more time, the more participants. So here's where we are. There's about 1 year right there. So we were way up here. You can almost get $1.50 for your US dollar when you went to Canada. That makes the $2 beers, Bradors, which not only are stronger beers in Canada, but they taste better than most of the American schlock, at least back in the 80s did. But you can see another key point here is when we pulled back to that 131 level, which we talked about earlier, which was right above, right where the Fed was. Guess what, folks? If you were looking on this time frame, you would have noted that this was probably a great place to buy if you were this, if you were trading into the Fed and you were a longer term 1 year chart. You're not going to get a lot of buy opportunities, but this was a big opportunity for you to say, I'm going to buy this before the news hits. We talked about after the news hits, how that trade was there today, but here's one that happened before that you really could have said, you know what, if I'm wrong, I'm going to be out somewhere below this 127.50 area, because that was really the last big major low. And if we didn't hold that, most likely again we're gonna rally. We're already up about 300 pips here on the USD from that 131.10 entry. We're at 131.30.40, so about 330 pips already. Huge move. Now we could go back and test here. You start looking a little bit into fib lines, and I could see this market very easily, going back up to at least this 139 area, and ultimately I think we're going to trade and take out the old high. So keep this in mind, why we use multiple time frames with the profile, and why it's so important, even though you're not going to trade necessarily if you're a short-term trader, you're not going to use this chart. But guess what? Long-term traders, you had a couple trades this week. You had not only in your long-term account, you had this buy, but then you had a week, midterm trade, and then you had a day trade because of the way the week set up. So I wanted to point this out as a great example of using the profile in multiple time frames to find opportunities in context and confluence and nuance. These are the things that are so important that you will not learn unless you live in this world, understand how the Fed and that announcement made the difference in this chart, both into the news and after the news. If you have any questions, just drop us a line at info@marketprofiletradingacademy.com. That's info@marketprofiletradingacademy.com, or you can go to our website. We've got all kinds of products. We're going to have a whole list of new products coming out for the first of the year. Please join us at the marketprofiletradingacademy.com. We look forward to helping you out in your trading business in 2017 and beyond.